Obviously, the big news tonight will be, which may keep some of us awake and maybe not keep others awake, but the effect on Cambodia and the rest of Southeast Asia will be interesting, because for those of us, those countries involved in the Trans-Pacific Partnership, there's still this lame duck period, and Secretary Froman is absolutely sure he's got the votes to get the Trans-Pacific Partnership through before Christmas, and many people say there absolutely aren't the votes. So it'll be interesting to see whether that happens. Obviously, Cambodia is not so much involved in that, but the ripple effect will be interesting. If it doesn't go through, then obviously other trade agreements will come through, and obviously if Mr. Trump gets elected, then no trade agreements will come through. So it will be an interesting 24 hours, and certainly an interesting 5 weeks before Christmas, just to see whether Obama is able to push through the Trans-Pacific Partnership. The types of investors that have been coming to the countries, or from the countries that are involved to Vietnam, particularly, have all been manufacturing companies. So if that dries up, then I'm sure again that the ripple effect will be interesting. We try and put this dashboard together every month, and you can see here, particularly, it's important to see where we've come from, where the FDI numbers have come from, where they're going to, but particularly where GDP is coming from. Often when you don't look at these figures very often, you forget just where the growth is coming from, and also you can see here where the accumulated GDP increase is having an effect. I was talking to someone in the audience just a few minutes ago, and we were talking about the importance of infrastructure, not just being able to get from A to B quicker, being able to move around faster, get goods and services quicker, logistics quicker, but it's also the trickle-down effect of those salaries that are being paid, not particularly big salaries being paid to the construction workers, but also to the entrepreneurs and the contractors and the subcontractors and all the people that are buying the cement and other products that go into the infrastructure. So, you know, this is important. I will get on to talking about residential housing in a minute, but the affordability is really behind the big question of how long any market can survive when it pumps out double the number of condominiums it pumped out last year, and then double again, and doubling again, and doubling again. It's all to do with affordability, and when we talk about the average size of the unit and the average price per square meter, in a minute you'll see that if we don't build up a strong affordability story, then very, very quickly, it doesn't matter where it is, whether it's a frontier market, an emerging market, or a developed market, clearly the story doesn't last for very long. Again, here it's important as a middle class emerges to look at the deposit rate and to look at the interest rate. One of the reasons why certainly we've seen a huge uptick in residential housing across in Vietnam is because our stock market's going nowhere. Yours is increasing in size, but it's not moving very fast, and it's not the most important asset class that every Cambodian family must have shares in the water company or in any other company. It's not like an IBM or a Dell or a Apple share. So it's either gold or land, and obviously those two asset classes, like across Asia, are overpoweringly important. Gold may not be the most overpowering asset class in in Hong Kong or Singapore, maybe gold shares, but still gold and land are the most important things for a family to own, certainly in the emerging parts of Asia still. The GDP numbers I'm sure you're all familiar with. Every country tries to show its head and shoulders above China or above the other markets that are growing. You can see here certainly the, I always call it LVMH, but let's get it right, LVMC are all pretty much neck and neck. One or two new announcements, one or two initiatives by a government, or indeed as we had in the Mekong, a drought in the early part of this year. You can see that can impact the numbers quite dramatically. January to May were bad months for rainfall, and they certainly affected rice and the agriculture in in the Mekong. These, of course, are important numbers because obviously every government likes to manipulate them, but the reality is if we aren't growing, certainly if Cambodia and Vietnam, Laos and Myanmar aren't growing at 6, 7, 8%, we can't provide jobs, any sort of jobs, for all the school leavers and college leavers and university leavers. So for us across in Vietnam, it's about 1 million jobs a year required just to keep an equilibrium. For you, it's probably more like 300,000. And that's across the board. It's not everyone can go and work for Goldman Sachs. Again, looking at where the FDI comes from and where the growth in the economy is coming from, you can see here. Again, if we went back 10 years, I'm sure this pie chart would be very, very different in terms of where the FDI comes from. Obviously, it's mainly China, again, it's probably moving quite quickly away from agriculture to infrastructure. And again, a couple of these big infrastructure projects can skew this pie chart, particularly the left-hand one, in terms of what is happening. Again, Cambodia needs probably 10 years of infrastructure being the most important sector, because obviously the road from here to Kep doesn't get any safer, doesn't get any wider, doesn't get any better lit, doesn't get until obviously until it's finished and joined up from end to end with a barrier down the middle, etc., etc. The growth, the countries from which are investing in Cambodia, again, as it moves away from just ODA and loan to more strategic investments in certain key industries that become a market leader. Again, Thailand's had its automotive industry, Vietnam has had furniture, footwear, apparel, and now Samsung. And again, Cambodia will find its legs and its areas where it becomes dominant. Before coming over the last 2 weeks, I've Googled Cambodia 20 times a day to try and find articles and try and give myself some background on the market here. And every single article, whether it's in the Financial Times, Reuters, Bloomberg, Wall Street Journal, Washington Post, New York Times, always mentions China. It's almost impossible to find an article that talks about Cambodia without at least 3 paragraphs in China. Again, it's impossible to find anything in Vietnam without mentioning Samsung and the Galaxy 7 phone. But it is extraordinary, and obviously whether it's to do with trade, whether it's to do with investment, whether it's to do with goods and services, whether it's to do with politics, whether it's to do with aviation, whether it's to do with infrastructure. And obviously, again, it's happened in other markets where one dominant investor has made a huge contribution to the market. The other thing that we read, it's impossible to find about Vietnam, is not mentioning Formosa and the dead fish. So again, sometimes investments come with good and with bad news. And again, these are important things. No one else, I would expect, is going to stump up the amount of money that is required for new bridges, road widening, overpasses, underpasses, highways, etc., upgrading of ports, airports, etc. So we've got South Korea in Vietnam as the major infrastructure provider. We've actually got the Vietnamese government plays a good game between Japan and South Korea, and obviously, as I mentioned, you've got China to help you here, and obviously that's going to make a huge difference as the market opens up. Also, what it will mean is that it will open up more land. You have had in the last 3 to 5 years a huge run up in land prices, both in the CBD and around the CBD. But obviously, as a road structure and a ring road structure and bridges go in around the city, land becomes more available, and hopefully there's an ability for price per square meter per plot ratio, accommodation value of land to stay stable longer. Where we've got a problem in Vietnam is that land prices are going up at 3 times the prices of condominium prices. So the best way to make money in the Vietnam story is not to buy condominiums, which are probably going up between 8 and 10% a year, but to buy land. And obviously that's why most of our stock market, the 75 listed stocks in Vietnam, 80% of them are land bankers. So there's a lot of new construction, but land banking. And again here, that's probably also, probably for the local market, that's probably very, very true as well. The demographics, you can see here the demographics in terms of where the premium is, the bulk of young people being around just coming into the labour market. This, of course, does change as people move from the villages to the cities. As they become more and more educated, obviously they have less and less children. We're probably 10 years ahead of you in Vietnam, and Thailand is probably 15 to 20 years ahead. I am certainly the only one in our office of 536 staff that has 5 children. I don't think you'd find many Vietnamese families now that have more than 2. And again, it may be the norm here to have 3 or 4, but it's going to drop. And that pyramid will change shape quite dramatically over the next 15 years. But obviously, as a residential developer, this is an eye-watering opportunity. Also, as you can see, Cambodia is the least urban population. That is going to change, and obviously once people have graduated from the universities in Phnom Penh or Battambang, they're not going to go back to planting rice in the fields. There are 53 universities in Hanoi. I think there are 65 in Ho Chi Minh, and I'm sure all the kids that come from the Delta never go back to the Delta. And again, this will happen here, and obviously for those of you that are residential developers, that is your target market at the appropriate price, at the appropriate location in years to come. You can see here also at the bottom the graph, Cambodia is the dark green one, where household expenditure growth is strong. Obviously again, there's not a great deal of difference between the Cambodia and Vietnam in terms of household spending growth. It's both going up. These are again exciting numbers for you as a developer, and again in Thailand going the opposite direction. I choked over my bacon this morning when I read these numbers, and I'm assuming that they're well researched. Certainly the bottom left, $7.6 billion coming into real estate in Q3. That is a huge number. I don't know if you can see it at the bottom, and again it's like 2009 construction permits totaling 10 million square meters of new accommodation coming onto the market. These are huge numbers, and obviously I'm not worried about the facts. I'm just worried about the absorption, where the money is going to come from, and who's going to live in them. No, I'm not worried about that at all, but just obviously the skewing of the market there. You can see here on our graph at the top left, again some interesting changes, how the market has always been dominated by Cambodian developers, but then as it gets bigger and wider and deeper and includes other cities and other types of property, obviously other Taiwanese, South Korean, Malaysian, Singaporean, and now obviously Chinese developers get involved as well. A very, very similar trajectory and very similar numbers to what we have going on in Hanoi and Ho Chi Minh City at the moment. Initially started by the local developers. They know their market better. They've got better contacts, a better ability to buy land at a better price. They've got better funding opportunities. They know the market quicker. They can see things changing, and obviously they're able to take advantage of it. And then across to the right, obviously the districts, and again, depending on when a project is announced or launched, the certain districts will have a disproportionate amount of new stock coming online into that particular district. In a minute I'll show you a map. I'm sure you're more familiar with these districts than I am. But again, it's all very well for land to be acquired and projects to be built. It's really depending on the infrastructure. Every time I come here, the journey from the airport to the office takes a little bit longer. This morning when I came here, the driver said, no, 1 hour from the office to the airport, it's just too risky now. You probably need an hour and a quarter. Maybe he thinks he's going to get a bigger tip. But the reality is that is what's going to be your life for the next 5 to 10 years before they start to really join up the underpasses and the overpasses. An underpass or an overpass takes, what, a year and a half to build. It screws the traffic up for a while, and that's life in a city that's growing with an urban population that will probably double in the next 5 years. So again, these decisions, one thing you haven't got is pollution. I'm sure all of you have been seeing and are familiar with what goes on in Beijing and Shanghai, and more recently in Delhi. We've now got it in Vietnam, and you will, I'm sure, get it as well. For the moment, though, you've just got traffic to cope with and not pollution. It will come as your industries start to change. And again, the types of investors that are coming here, it was a similar story with us in Vietnam, that you get maverick, high net worth individuals or family offices, or small cap developers from Thailand or Singapore or Malaysia coming here and trying their luck in the local market. And if their timing is right, then obviously it goes well. If the timing is wrong, then they haven't lost much and their share price hasn't been impacted. What would be interesting is when the government-linked Singaporean groups come here, or the big listed South Korean groups and Japanese groups come. At the moment, they're small mid-cap companies. Again, you're more familiar with these numbers than I am, but you can see here, if you divide the size of the project by the number of projects, you can see, these are projects now that would maybe 5 years ago, a big project was 200 or 300 units. Now you can see projects here of up to 1,000 units at a time. These slides will all be available, so if you want to take photographs, please do. Just make sure you get me in it. Get my glasses off. But otherwise, I'll provide the slides will be available. And also probably easier to read. But you can see here some of these projects are really quite large, mainly mixed use with some component of commercial property. If we haven't mentioned your project in this slide, then please tell my colleagues afterwards and we'll change it. But hopefully this is a fair coverage of the projects that are being constructed at the moment. Again, the size of these projects and the scale, the speed of delivery is all increasing quite dramatically. I'm sure probably one of the best stocks to buy on the unlisted market here would be contractor stocks. Again, most people put their money into real estate, but I'm sure also the contractors and subcontractors are doing very well here. But again, you can see here large-scale projects, and particularly as the infrastructure improves, the ability to sell these units off the plan, because it's all off the plan, is obviously very, very important. When we look across, and people ask me all the time, whether I'm in Singapore or Hong Kong or back in Vietnam, people say, what about the Cambodian market? And I say, interesting. Obviously, it's not the first cycle. The first cycle was when CBRE opened its office about 8 years ago. We had the first movers, which were mainly South Korean developers doing high-rise projects. So this is the second time around. The first market blew out relatively quickly after 2008. Again, a mixture of oversupply and just a little bit of reticence about moving from townhouses, row houses, villas into high-rise and mid-rise properties. But you can see here, and this on the right-hand side, these are interesting numbers. It's a reflection of the people that we talk to and that the developers are telling us. This can change dramatically. Again, it can change because of interest rates, it can change because of sentiment, it can change because of the type of development and construction. It will change from district to district and project to project and sector to sector. So this is a broad brush. Obviously, we've tried to avoid the speculation word, but clearly there's a large part of, and my colleagues reckon it's up to 60% of the people that are buying at the moment. And I'm sure in some projects it's even higher. And obviously for the affordable end, it's much lower. But this is where we are. And obviously, once these guys have got 5 houses or apartments already, are they going to continue buying? At the moment, the answer is yes, but only selectively, very, very selectively. And as a result, it's taking longer to market a project. The secondary market is softening. It's not dead. We're still doing secondary market sales. It's taking longer to resell, and people are having to be much more flexible on pricing and payment terms. But it's still there. And again, you can see here that the market that we cover, and I wouldn't say that's truly reflective of the total market, because CBRE is mainly involved in the more higher end projects, that you can see where the buyers are coming from. Again, for some projects it'll be higher, and others it'll be much lower. In terms of pricing, and again, my colleagues use about 800 bucks and below per square meter for affordable, from 800 to 1500 for mid-range, and from 1500 to 2500 for mid-range, sort of high and above 2500. So you can see that's probably higher than we would use in Vietnam. We'd probably our affordable is probably from 1200 to 1800. So your band is bigger, maybe because there are less projects, or maybe because there's still land pricing and costs are higher per square meter than they are in Vietnam, or maybe your margins are higher. Our margins would probably be around 15 to 22% for the main developers in Vietnam. So again, your margins may be a little bit higher, but as pre-sales slow down, then obviously your margins will suffer as well. But you can see here, this is what my colleagues are saying. Resale price is down a bit, and certainly the length to sell, to market, is beginning to increase quite dramatically. Again, that's, I think, to be expected. In terms of yields and prices, you can see here just some comps with other markets. Obviously, Singapore's way off the chart. Bangkok still a lot more expensive, and Phnom Penh and Vietnam probably neck and neck, depending on whether Vingroup's announced a big project. We've got developers now in Vietnam that are doing projects up to 10,000 units in one project, in one phase. So again, what one development can skew the whole supply and pricing charts and stats. Yields, I spoke to my colleague yesterday and again this morning, because I found the yields that you've got here to be regionally very, very high, and I wanted to get some ideas. So the types of units that we're leasing out, whether it's in a service department, obviously, which is a grossed up number, or just a basic apartment where the tenant or the owner may provide the furniture on a 1 to 2 year lease, we're still getting tenants that are prepared to pay somewhere between 18 and 25 bucks a square meter. That's a good rent. That's typically up there with an office rent, a commercial rent. Occasionally, obviously, the lease isn't so strong, and it may only last a year. We have to find a new tenant, but that's a high rent, and not surprisingly, it's driving some of the market as well. You can see here that your yields, gross basis, are certainly more attractive. In Vietnam, nobody pays tax on their rental income, although they should, and I'm sure here it's a little bit grey, but obviously it's clearly defined. And here is a breakdown. And again, I think it's important because investors now, 10 years ago, they were not that sophisticated. You would not find many Singaporeans that were even vaguely interested in the Cambodian market. I went to do a weekend in Singapore, was about 4 months ago, and I was really bowled over by the sophistication of these guys. They've got, the people that are buying in Cambodia own apartments in Melbourne, Sydney, London, Tokyo, and they're interested in this market, and these are the stats that they want, and they know them probably better than I did, and they compare these things pretty closely, and obviously if it's too good to be true, it's too good to be true. They also know that the market is complicated in terms of what a foreigner can borrow on shore. Probably, again, very, very difficult for foreigners to borrow money in Cambodia, to buy at a retail level, and again, as it is in Vietnam. But these are the stats that people compare And also they're very, very, very concerned about obviously oversupply numbers, and they really want to know the affordability. So if any of you can write an algorithm for affordability in emerging markets, you will make a lot of money. We try our best, but I don't think we come close to being able to answer fully all of the issues that both banks, life companies and individual investors have. But at the retail level, Cambodia, for whether you think the market's got too much, too soon, too quickly, in too many of the same areas, in the same sector, at the same price, the foreigners still believe, because their markets in Bangkok and Singapore or Hong Kong are in very, very bad shape. And again, just on Monday, yesterday, the chief executive of Hong Kong was bringing in yet another band of bad news relating to further stamp duty and taxes on residential property. So I'm not saying that the foreigners are going to buy your way out of any future oversupply. Sure, I'm not saying that at all. But people still see these emerging markets, the developing markets, with a little bit of transparency and the rules regarding foreign ownership as being quite friendly. There's certainly a big market out there. The big question that we have is obviously occupancy, because investors buy mainly on capital gain, but they want to know that there are groups around that can manage these properties, whether it's a CBRE solution or a developer solution. They also want to know is how deep is the occupancy market. There aren't enough lawyers and bankers and cost managers and project managers. But one of the things that we found again in the Vietnam situation is every Vietnamese family wants their kids to speak English. So certainly the biggest growth industry in Vietnam is teaching English. And I was talking to my colleague Richard last night, and he was saying that these teachers now are all going to speak with a South African accent, because there are certain countries in the English-speaking world that for $1,500 they are very, 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 very happy to come and work in Vietnam or Cambodia. The South Africans will soon be surpassed by another country that's got an extremely weak currency, and that's the pound. So your children will be speaking perfect English, Oxford English or Scouser English in the next few years. And I think it's also important is that, again, you all read your wonderful newspapers. Mine was put under the door at 6:30 this morning, and I spent 5 minutes reading it. But seeing what is the rest of the world writes about Cambodia when it's not talking about China is really important. And then seeing what is going on in the rest of the residential sales world in Southeast Asia, and you'll see that actually Cambodia is in a pretty good place. I didn't think I'd be saying this 5 years ago, and certainly 5 years ago, 8 years ago when we started the company for the third time, I didn't think I'd be standing here talking about residential property in Cambodia being actually a pretty interesting opportunity, even though your supply is doubling for the next 3 years, on having already doubled. But you can see here that in other markets are really beginning to struggle, particularly because either foreigners are turning their back on it, or because there's no institutional market, or that multinationals are moving their headquarters away from those countries, or the Prime Minister stands up and calls the head of the English-speaking world son of a something. But again, these are big issues, which means that multinationals just may make a decision not to reinvest. Vietnam has 190 of the Fortune 500 companies in it at the moment, up from 185 last year. Not a big increase. And I've asked my colleagues to work out how many of the Fortune 500 companies are in Cambodia. I would imagine it's around 60 or 70. But again, for you to go from 60 or 70 to 100 will make a huge difference in the residential leasing market, in a whole host of other, in FMCG, in advertising. The trickle down will be very, very interesting. And these jobs will obviously all be created for Cambodian and Khmer speakers. So again, this have a big impact on the middle income housing. So what we're sort of drawing a conclusion towards is that foreign investors, foreign developers, when they come to a market, they typically gravitate very, very quickly to the luxury and high end. And that luxury and high end, whether it's in Bangkok, whether it's in KL, whether it's in Manila, whether it's in Vietnam, has been saturated. And we're beginning to see that's happening now in the Cambodian context. that the people that already own high-end properties, they already own 5 or 6. And we worry that that market, however exciting and however good it looks on paper and however it's exciting to have and read about in newspaper articles, is beginning to feel very, very heavy in terms of new numbers. And again, you can see where the high end is going. When a market has 35% of its stock, its futures, its current and its future supply in high end, then at above $3,000 a square meter, then I think the writing is on the wall. And obviously, some of that is the ability to suck in new developers, and you can see here just on the left what it takes to be a developer in Cambodia. Some markets, obviously, to get an industry going and to pump to prime the pump for affordability and for growth in the economy, then construction and infrastructure plays a very, very important role. So I can see why the government has kept that low. But on the other hand, it may now be a good time to begin to increase the market cap of companies coming into the market, because clearly it's very low. And again, you only need one big run on downscaling of the market for NPLs to appear, and obviously for those numbers to be way too low. Just moving now on to another market that we've been covering, and again, a market that was when we started to work with some of the developers in the second home market in Sudanville and Kep, going around the region and talking about the opportunities in Cambodia for second homes. It was extremely difficult. I remember talking to people about Korong and Songsa and Alila. Very, very difficult to get any interest. But a few articles on the front page of Condé Nast and other magazines is beginning to get a little bit of traction. But it doesn't take long, and I hope this newspaper cutting is right, but $23.2 billion coming in to one market, and that's twice the that's twice the FDI of the whole country. Vietnam, 12 billion, 23 billion. That's a huge amount. So I'm hoping the decimal point's in the right place, but that's a very, very big amount of money that's coming into, and I'm guessing this is for an IR project or multiple phased IR projects. But it's interesting how as one market matures and other cities and towns on the coast begin to pop up and become of interest, particularly when infrastructure is improving. This really, really comes down to infrastructure, lift and capacity. The amount of people that were prepared to come to Phnom Penh and drive down multiple times a year is probably not big. So again, it really depends on the airports and the roads and infrastructure. If that improves, if that takes off like it's done in places like Da Nang or Cam Ranh, then this creates lots and lots of jobs and creates huge opportunities for developers. Again, it's interesting if the government goes off to Russia and they sign these aviation agreements, and Cambodia becomes the hottest place for the Russian market or the China market. Again, this can really, really begin to create a lot of wealth and, as I said, jobs for people where 5 years before there was only farming and sitting by the beach. Again, what's happening here is it's not just dominated by the local market. You can see here Koreans and Chinese developers getting interested in that as well. These are some of the projects that we're tracking in terms of size and volume and what they're building. Again, this has changed a lot in the last 5 years, where there was just 1 or 2 projects. Some of these projects are obviously aimed at the Condé Nast Four Seasons end of the market, and some of them are obviously at the very other end of the market, the bucket and spade market, with packaged tourists coming from Russia and China. So you won't get 2 developers looking at the same piece of land and working out that they're going to do the same thing. They'll often come up with completely different ideas. One just hopes that they can share the infrastructure. When it comes to, again, pricing and comparing to other markets, so much of it depends on infrastructure, so much depends on capacity of the airlines, the routing, how often their flights from Bangkok or Singapore. Really, really, really important to get this right. Without the correct infrastructure, it just does not happen. Unfortunately, you get people that will pay to come to these bases, but you don't get the numbers, and it's all about the numbers, both for the high rise, the high end, as well as the luxury end as well. So we're optimistic about both, but wow, it really comes down to capacity. And just finally, an update on something we started talking about last time we were here about the retirement market. We had some consultants work with us over the last 3 or 4 months, and these were some ideas and images that they've come up with, and just trying to lay down here where that market is. Sorry, it's too small to see, but you can, if you could see it, you know, the vertical lines are the affordability or the costs of living, the annualized costs of living in the Cambodian context compared to other places where people typically retire to. And this, again, is looking at a basket of the key things that make that people of my age begin to think about not just the cost of living, but also medical and travel and other infrastructure, and just the freedom, the acceptability level. So again, I think this is we weren't trying to prove anything here, because we were just trying to see whether there was a market that was sustainable. Malaysia's gone a long, long way to trying to attract retirees with their silver-haired visa. Cambodia is just starting, and it's an interesting where it possibly could go as long as you get the right type of retirees. And my colleagues have based this back on Australian costs, because they are Australian. And again, it's beginning to get a little bit of traction. You can see here there are articles being written about it from time to time. A lot of it comes down to medical, and you know, if you're in good health, it's not something you worry about, but obviously as you get older, the ability to have just a simple consulting 10 minutes with a private practitioner, general practitioner, in your own language, and knowing that the pharmaceuticals that you're buying over the counter are safe. Again, these are issues that Cambodia has yet to overcome. And then again here, where Cambodia sits compared to a basket of other countries, but also particularly to Malaysia, the Philippines, and Vietnam. And it's, you know, we were surprised with the results of this work, and again we'll continue to discuss it. And what it does, it means that you as an investor, it means that you as a developer, it means you as a bank, you've got to be seeing, you know, if we're just trying to sell the same 1,000 units to the same 1,000 buyers, eventually that's going to stop. When the market's improving, the FDI and GDP is increasing, investors are coming here, then sure, yes, that market, that 1,000 units can be absorbed relatively easily. But you know, once people have got 5 or 6 units, it stops. Once rents go down, once yields go back to 3 or 4%, inflation ticks up, the currency gets a little bit weaker. At the moment, most of your tenants are paying their rent in US dollars. Again, that's pretty good. That's not happening in other markets anymore. So again, it's another big tick for Cambodia. In Vietnam, people pay in dong now. Nothing is paid in dollars. There may be a clause in commercial leases, but now it's pretty much focused on the local currency. So again, just makes your market a little bit more interesting to investors and obviously to developers. Again, there's other things that are beginning to become more interesting as people move away from working 9 to 5 and begin to lead a more nomadic existence. If I was going to write a book, not that I ever would, then I'm sure that Cambodia would be certainly high on my list of places where I would go and hide from my 5 children and get a bit of peace and quiet. And I think that you know, this whole way where people are working, Cambodia really falls into a very good place. There's a lot written now about alternative practices and people working from home a lot more and working together. Again, Cambodia doesn't need to be building huge office buildings if people aren't going to be using them. Again, refurbishing old property, reusing old property, giving it a second use, a second look, becomes very, very interesting. It's also an awful lot quicker. to do. We will be focusing on, next time we talk and write, on the industrial market. We will update our stats at the end of this year. We will continue to look closely at the retail market, which is changing and growing. My colleagues are working hard with Hong Kong Land on their new project. We were just looking at the numbers of new retail tenants that are coming across from Thailand, coming across from the Philippines, coming up from Singapore and down from Beijing, Shanghai and Hong Kong. So again, the retail environment and ecosystem is really, really changing. So we'll continue to track the retail market and obviously the industrial and logistics market as Cambodia isn't just known for t-shirts and other things, and it begins to morph into a more interesting and hopefully institutional market as well. So on that note, thank you very much indeed. We will put these slides on our website and make sure that you get them in case the photographs are not that clear. We've tried hard to cover quite a lot of ground, and if we've made a mistake or not put the right decimal, put the decimal point in the wrong place, or we haven't mentioned your project, even worse, then please talk to James at the back and the rest of my team to make sure that we truly recognize your project. I'm probably the worst person to answer questions. We have still got breakfast laid out. There's lots of coffee. I know some of you have got to dash off to work, but happy to take a few questions as long as they're not on tax or anything to do with the residential market in Cambodia. I'm pretty good on football, and I'm not good on the American election. But thank you very much for coming, and I hope that it's given you all a little bit of a view, an outsider's view, looking at this market. As yes, many of you got questions about supply, affordability. It's probably no different to some of the other markets in Asia. It's probably got a little bit of indigestion at the moment. It's probably having a little bit of trouble swallowing 3,000 to 4,000 units between now and probably Easter. And pricing obviously will be hit, and absorption will also begin to go down. But as long as urbanization is happening, as long as the infrastructure is still going in, we're confident about the mid to long term future of the Cambodian market. On that note, from CBRE, thank you very much for coming.